Okay, you guys, I'm Tricia with Easy E-mini Trade, and you've had plenty of opportunity to read the disclaimer there. Basically, don't trade with money you can't afford to lose. Um, I'm presenting for Maria Russo's. I have nothing to do with her company. I have nothing to do with the programming or development of her order flow tools. I use them, I like them, and I don't mind doing webinars, and she does. So that's why I'm doing it. So I'm a fan of the tools. Okay, so this is going to be an introduction to trading order flow and value areas. If you've attended any of these order flow webinars, the first few screens will look familiar, but I did something a little different today because of the automated, so hopefully it all works out. And if you'd like more information on the tools that you're going to see, they're for Ninja. Obviously, there are lots of tools out there. Try them all and then go with what works best for you. I tried many of them, and that's why I wound up with these. So tradeorderflow.com is her website, and you can send her an email at tradetheeminis@gmail.com if you have any questions. And I'll put all that information in the recording that's going to go out tomorrow as well. Okay, so probably most of you are familiar with Market Profile, or you probably wouldn't be here. So a market profile is a vertical graphic that displays price and time, and it's called a TPO, time price opportunity. And this allows you to see at a glance at the different price levels where you have the most concentrated volume at these different price levels. And I'll show you what I mean in just a second. And in the tools that I have from Trade Order Flow, we can choose how we want to view our chart. We can choose the regular typical TPO, time price opportunity. We have the opportunity to use the VWAP chart, which is volume weighted average price. And I have that marked in yellow because that's what I like to use. And we also have the option to use volume. And if you want more info on Market Profile, you can go to CME Group, and I can give you these slides tomorrow in the email with the recording, and you'll be able to click on that link. But if not, just go to cmegroup.com and then do a search for Market Profile Education, and they have an interactive presentation that you can use to get a little more familiar with it. Also, book written by Peter Stottlemyre. If you'd like to look at that, I preferred Mind Over Markets by James Dalton, and you could probably find something that's a little more recent out there as well. So typically I have this pretty stretched out so you can see the different letters, but this is what most of us think of when we think of the market profile. And this is the TPO. This is a time price opportunity. And you'll notice all these little letters in here. And the way that it works is each letter represents a period in time. Usually it's 30 minutes. So for 30 minutes, as price is forming in that particular interval, you'll see, let's just use R for an example. So for 30 minutes, wherever price traded during this time interval, where R is, it's going to plot an R. And so for each new 30 minutes, it's a different letter. So what you'll notice is, this is really squished down, but what you'll notice is the higher concentrations of the volume areas here. Now this is the whole week. This is yesterday. Today wasn't on here just yet. So this is, what day is this? This is Sunday, Monday, Monday, Tuesday, Tuesday, Wednesday, Wednesday, and part of Thursday. So what I just showed you with the letters are these charts just all stretched out. So like I said, each of these represent the different price levels. And so by looking at this for the week, you can see where the majority of the volume concentrations were. And right where you see this pink box, that's the fair value area. That's where 70% of the volume was traded this entire week. And each day you'll have a high value area, a low value area, point of control, and then a fair value area. And this is a little cumbersome to work with, in my opinion, but still you can get a pretty good glimpse at the different levels, especially if you stretch it out. But that's what the typical market profile is. And I just want to urge you, Maria is here and she'll answer questions via the keyboard, and when we're finished, we'll answer questions and I can give her the mic and she can answer any other questions as well. So this is what I use, and this is part of Maria's tool. So instead of having to use this or this is what we'll use. And like I said, I'm choosing to use the VWAP option. And like I said, you have the TPO you can choose, which would calculate this a little differently, and you can use volume, which would calculate these levels a little differently. So what you're looking at here in yellow is the fair value area. So this is for yesterday on the NQ, and this is on an 8-range chart. So where the yellow is, that's the fair value area. That's where 70% of the volume was traded. Then I've got my VWAP here. That's volume weighted average price, point of control. And that is going to run smack dab in the middle of the fair value area. What we've got above us here where it starts in blue is high value area HVA, number 1, and high value area number 2. On the bottom side, I've got low value area number 1 and low value area number 2. Now what you'll find is that when your value areas are really sideways, so when you look at this chart, this fair value is pretty flat, right? There's no real direction on it. It's not sloping in one direction or another. And what I've found is, which has been really helpful for me, is when I see that, I'm going to be pretty cautious about taking breakouts or breakdowns when it's coming out of the fair value area. Usually what I'll do is I'll try to let it bust out and then do a retracement, and then I'll take it, and I'll show you what I mean in a second. But when this is pretty flat like this, usually what you're going to find is price, when it busts out the top side here, it's usually going to try to find its way back to the fair value area and then the point of control. And then if it breaks the point of control, then usually what's going to happen is it's going to trade down to the low value area. And you may have heard the term, Maria uses it all the time, coast to coast, where it goes from one side of the profile to the other, and then back up to the other, and then down to the other side, just back and forth, back and forth. And you'll see that especially on the days where you don't have a large slope, like I said, when you're looking at these levels. The green dots that you see here is the previous day's point of control. And you can customize the colors any way you like, the way your lines form any way you like. It's totally customizable, and this is how I like to look at it. So the crosses above here, this is, that you see up here in red, this is yesterday's high value area, and it will plot both high value areas from yesterday. So just like you see the two high value areas for today here and here, it will plot yesterday's on there, both of them. It's only showing the one here because obviously I don't have it scrunched up enough. And then the blue dots that I have here are a low value area from the previous day. And this is, I think I mentioned this is NQ yesterday. Now, what you're looking at over here on the right in the black outline here, this is the cumulative volume. So this is including a few different days, depending on how many days you have loaded on your chart. The area that you see in color here over to the right, this is volume for today, the current day that you're trading. So obviously this isn't today, this is yesterday. But the green would be in the fair value area, the blue outside the fair value area, and then the red is completely outside of the profile. So the way that we can trade this, there are a few different ways. We can, oops, didn't mean to do that. We can trade as we're breaking out of the fair value area. We can trade the breakout of the second high value area here. So high value area 1, high value area 2. And we're looking at the order flow to confirm, and I'll go over more of that in just a little bit. We can take shorts off the top, anticipating it trading back down to this high value area and then back down to this high value area. We can trade once it comes back in the fair value area, anticipating it finding its way to the point of control, or even the previous day's, one of the value areas from the previous day. I didn't mark this one here. This one here is actually a low value area from the previous day as well. So we can take the breaks of those. We can take the break of this, the blue dots. We can take the break of the low value area here. We can take the break here. We can take it coming back into the fair value area. So lots of different ways we can trade it. Now, like I said, if it's flat, you're probably going to be a little cautious on taking the first attempt at these areas, and I'll show you what I mean. And that's if you want to be conservative. Now, what I have on here is I always put a stochastic on here, and Maria's going to probably cringe when I say this, but I love divergence, and I know she's tired of hearing it. But this is just a regular old stochastic, and the settings that I'm using on that are 14, 3, and 3. And I'm just choosing not to draw the D line. I'm just drawing the K line. Yeah, you can change all these colors. You can change all these colors to anything that you like. So this is just basically a breakdown of the different areas that you're looking at. And I'll show you the different choices that you have. I'll bring up a chart and I'll show you a live chart. And this is what I just want to show you this. This is old, but you can see how we have a nice slope going here. So when you have a nice angle going on your value areas, then those are great to take pullbacks off of. So if you're going higher, 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 you can take a pullback every time you trade back down to this high value area. And if you trade back down to this high value area, you can take a pullback from there as well. So lots of different ways that you can make this work for you. Now, what I like to use these in conjunction with my own setups that I like to trade, but you can trade these all by themselves. These are setups. Everybody always, is asking, well, what's the setups for them? That is the setups. You're trading the value areas. So, as just mentioned, the use of the value areas from the market profile, they can work really well, but it's difficult to know here. How do you know it's going to go higher and not roll over? Or here, how do I know that this is going to break out and not roll over here? Obviously nothing is 100%, so obviously we never know conclusively. But that's where order flow comes in. So the two together, trading the value areas with order flow, are a very effective combination. So the market profile tells us the different areas that price will either hold or trade back to or break out from. And then order flow is going to tell us who's in control at that time, the buyers or sellers. So that's going to, like I said, assist us in determining, is this going to pull back or is it going to break out? Well, I'm using the VWAP, Tom. So I'm using the VWAP of the market profile. Like I said, there are different options that you can choose. So mainly what we're looking at are the value areas of the market profile. So again, it's going to be up to you whether you choose to look at it as a VWAP, a TPO, or volume. So that's going to be up to each individual person, which they prefer. And excuse me, you guys, my allergies are driving me crazy. And so this is the order flow. This is a little scrunched up. This is on a 5-minute chart. And like I said, I'll show you a live chart and I'll spread it out and I'll show you how I like to use it. And you have many different options in viewing this also. And this is on a 5-minute chart, and you can put it on a range chart, tick chart, time-based chart, anything that you like. I choose the 5-minute, and I went kicking and screaming to use the 5-minute. But what you're going to find is basically this is going to give you the bias of a 5-minute chart. And so what I'm looking for, you'll notice here you can see the delta, and if you're not familiar with what the delta is, it's the difference between the buy orders and sell orders. I'm just going to make it really simple. Instead of saying bid ask, I'm just going to say buy sell. So if it's negative, like here you can see minus 595, excuse me, you guys. So basically that's telling us that there were 595 more sell orders than buy orders. Here, negative. Here, positive, negative, positive, negative, excuse me, positive, positive, negative. So what we're looking to see, now obviously this is a static chart, so it's really easy to see, okay, well I had negative delta, so I'm going to take a short. I have negative delta, I'm going to take my short. It's not quite that easy because these numbers are constantly moving, and you'll see what I mean in just a second. So just having a negative delta isn't enough to take the short. What you want to see is if it's negative and it's getting to be a bigger negative number. Obviously, if it's a negative delta, but this started out at 1,000, obviously there are buyers coming in. So you need to really look at the direction that these numbers are flowing. And I am only choosing to put the delta here and the volume and the cumulative volume. So this is going to tell me the amount of volume on each bar, and this is the cumulative volume for the day up to that point. And you could put the bid ask in here. There are lots of options, but this is what I want. I want to see just the delta, the first thing I look at when I get there. On the left here, you're going to see that we've got volume at the different price levels, and the darker concentration of blue that you'll see here is the higher the volume in comparison to, like, here it's pretty light, and here obviously it's pretty light. So that's going to be helpful in taking the trades. Also on this chart, I choose to put the value areas on here. So this blue line here that you see would be the POC, and then this would be the first value area low, and then this would be the second value area low. So it's the same thing as what you were just looking at, like on this type of chart. So the POC, low value area, second low value area. So that's the same thing as what you're seeing here. And so you could realistically, just trade the breaks of those right on the order flow chart if you so desired. And like I said, this is a 5-minute chart. It helps with the bias as opposed to using an 8-range chart for your order flow and the 8-range chart for the value areas. At least that's what I find. But you can mix and match any way that you like. So what I'd like to do is I'm just going to show you, I'm just going to pause this for just a second, and I'm going to just bring up the my ninja chart with the order flow on there, just so you can see what it looks like. I'll stretch it out a bit. All right, so here it is, and it's a little, obviously not much is going to be going on here because of the time, but what I find is, and Maria, I'll answer any questions that you guys have, but what I like to do is I'm choosing to use the bid-ask histogram, and I do use the action bar, and I'm just going to put that on here so I can show you that real quick. Here we go. So we have an action bar, and this is forming and this is forming at the same time. Now, unfortunately, they're going to be the same, likely because of the time of day. We're not getting a whole bunch of volume coming in. But this will give you aggressive orders coming in. And how I like to use the order flow is you can see these higher concentration of the different prices here in red, green, etc. So right here, and these are read on a diagonal, FYI. But if I see a high concentration of red here, I'm going to know that if, let's say I was down here and I was trading higher, I was taking a buy because I had a setup. Let's say it was coming out of a value area just for the sake of this explanation. And so let's say I was down here somewhere and I bought it. I would be looking to the left and seeing the areas that would likely hold up. So looking over here to the left here, if I bought down here, I would be looking here where I might have some difficulty. Now keep in mind, this is late. This is like, I think like at 3:45 or somewhere around there. But I would look at this and I'd say, okay, I probably will have a little difficulty getting through this area. So we kind of get stuck there, pops up here, comes back down, still getting stuck in that area. Then the next area I would look for is the next high concentration area, which would be right here. We get pretty stuck there. And again, it's the end of the day, so probably not the best example. But this is constantly moving as these bars are forming. So this is here currently forming, but we've got 2 orders and that have come through there. So obviously this isn't going to be moving very quickly. But if you go back to, I'm just going to scrunch it up to where I can find a little earlier. All right, so like right here, let me just stretch this out. So here in comparison, and this probably moved pretty quickly, there's not a whole lot going on up here. So my guess is that this dropped probably pretty quickly, and then it probably held right in this area where we've got this big concentration of green. So I'm just going to put a line there, right there. And so what that would tell me is the next time we got up there, we would probably have a little difficulty. So you can see here that we just couldn't get up there, couldn't get up there, couldn't get up there. Here we popped through just to come back down, and then eventually we did get through. You can use all of these different concentration areas as a heads up to the trouble spots. So if you keep holding in an area like, let's say, here, for example, if you keep holding there, and you're building up a big green price level there, then realistically you could have some difficulty if price were, after it moved down was to try to trade back up, it'd probably have trouble there. So in all those concentration areas, just within each 5-minute bar, you could pay attention to those. Today was a little difficult to look at it because we had so much volume coming in this morning. But what else I'd like to show you is you can see the different concentrations of volume here for the day. So red are the sell orders and green are the buy orders. So you can see that if price were to trade, back up or down from this area here, this is likely an area where we're going to get stuck. You can see we have a little bit less volume here. So if we were hanging here and we were moving lower, then the next likely area we would get stuck would be right here. Here we have a little bit of an opening. So if we were able to get through here pretty easily, then the next likely area where we get stuck would be the next high concentration of volume. If you don't have a lot of volume, like here, and you got through this area, you look down to see where the next high concentration of volume would be, which would be right here. So that is helpful. Maria calls it a suction area or a vacuum, where it goes from one high concentration of volume area to another. And that works so very often. If you have a low volume area and let's just say that you're looking to take a break out or break down in this case, let's just look right here. We do have the low value area here. So if you were to just take the break of the low value area here, you can see that you've got some higher volume here, but if you could get through this area here, likely the next spot you'd get stuck would be down here and then down here. So you can use volume that way, and it's really very helpful, I find. But looking at the chart here, and I'm going to show you some examples in just a minute. But I can change this. If I don't want to look at this as a bid ask histogram, I can just look at it as bid ask. So if you prefer that look, you can use that. You can use a bid ask ladder. A lot of people like that. And then what it will do is it will put a big black square. And this is all customizable as well, what you want to show, what you don't want to show, and the colors, etc. But this would be like the most relevant price level on this bar here in the sell side. This would be the most relevant here on the buy side. So some might find that helpful. You can look at it at just delta, which like we just discussed with the difference between the bid and the ask, delta percentage, graduated volume if you prefer that. Lots of different options, but I choose this. This for me is so easy to see because if you're familiar with order flow at all, it can be almost impossible to look at the different price levels where the orders are coming in fast enough. So you'll make yourself crazy if you're trying to reach each individual line, but at a glance, my eyes are drawn right to, the higher concentration areas. So like I said, I find that really helpful. All right, so I'm just going to pause and I'm just going to show you a couple examples, well, a lot of examples, but just give me a second here. Let me get back to where I want to be. Here we go. All right, so this is yesterday on the NQ on the 8 range chart. This is the open at 9:30. So we know the yellow is our fair value area. Purple is the point of control, or VWAP, because I'm using the VWAP chart. So I can take a break of yesterday's point of control, which is the green line. I can take a break of the low value area. I can take a break of this bar here outside of our low value area here. I can take a break of the previous days here. I can take this as a short on the retracement. And so what I would be looking for is I'd be looking at the order flow. So in this area here, I would be looking at the order flow and I would want to see a bunch of sellers coming in. So that would mean negative delta. And I want to see that negative delta number getting bigger. Bigger, bigger, bigger. Here on the retracement, once I break that low value area again, I want to see the same thing. Now, I'm always looking to the left. I want to see where support and resistance are. I'm always looking. And anybody who knows me knows I'm always saying, look to the left. Where did it get stuck the last time? So if I was taking this, I would look to the left and I'd say to myself, okay, I can take this short and I know that I've got to get through this low value area from yesterday, and it managed to get down here to 54. I can't see that. Is that 54 or 64? 64. So if I take this, that would be the area that I would be looking to hopefully hit. And then on the retracement here, if I take this again, I would be saying, okay, this was a choppy, ugly mess last time in this area, and it couldn't get through yesterday's low value area. So I might use that as a target area. And then once it breaks again, I can try again. Now, what's going to determine if I'm going to try it again are who's coming in, the buyers or the sellers. So I'm going to want to see it on my order flow. I want to see lots of red coming in. And you can see that we've got this angle going here on our chart here on our low value area. So basically, if we see that, we're good to go for retracements back up to that. Again, as long as we've got sellers coming in. And then once we trade back into our fair value area, we can take a break again if we get a close. And it's up to you if you want to wait for a close below that low value area or you want to just take the break. Obviously, you can be very aggressive and just have a sell stop sitting there to trigger you once it breaks. Or if you're not convinced it's going to break, you can do something like this. Let it break and then retrace back up to it. Most of the time it's not going to drop like that. This is, about 4 or 5 minutes into the open yesterday. But a lot of times you'll get something like this, where it comes up, tries to break, doesn't, and then it finally does. So you can take it under the bar that finally does, or you can, what I'll usually do is I'll draw like just a little line under the lows of the bars here that we're holding, and then I can take a breakdown under that area. And I have this on an 8 range. You can put it on anything you want. So it's totally up to the individual how they want to view it. So what I want to show you is, I want to show you what this looked like on the automated. So these are the entries that you could have taken yesterday. And you don't have to take them all. You know, stick to your plan. If it looks ugly, choppy, I mean, this was an ugly mess here, admittedly. So what I would be looking for me is I would be looking for some divergence. Now, not in front of news. I think there was news at 10 yesterday, but I would be looking for divergence off the bottom here, so, which would be lower lows in price while I'd have higher lows on the stochastic. And then I can buy off the bottom here as soon as I see some buyers coming in. Obviously, they did eventually step up and pushed it back into the fair value area. And then once we're hanging around in here, can you notice now we don't really have a great slope, right? Now it's pretty flat. So this on the automated looks like this. Now, the automated, there are lots of choices on that as well. Now I have the order flow, the market profile VWAP indicators on here, so I can see the low value areas and high value areas, etc. If you use the automated, you do have the choice not to even put any of this on here, and it'll take the correct entries, but you do have the ability to manually manage your trade once you're in. And for mine, all I did was I have mine set at 12 tick stop and a 12 tick target. And to be perfectly honest with you, I have not used it in my account because I don't have my account with a broker that uses Ninja. I actually have my account with Infinity. But you can use this to take your orders, to take your entries automated, and it will link up with your account, and you can, like I said, manage it either manually, or you can set up your targets. You can set up to trail. You can put an ATM, a Ninja ATM strategy in there as well. So for me, just using the 12 tick target and a 12 tick stop on the NQ, just on one contract here, not trailing or anything. So right here where we, and this is on a 4 range. I have it on a 4 range for automated because on my computer it tends to get, if I wait for like you have to put it either true or false to wait for the bar to close. And if I put it on false, I tend to have some issues. It's my computer. I have it on a laptop. It has nothing to do with the automated or the indicators. It's just the computer that I'm running it on. So I have it on a 4 range because then I figure if it's waiting for a close, at least this is going to be a smaller chart and it'll get me in sooner than waiting for an 8 range to close. So right here, this took an entry right here, and it's not marking it, but the next screen will mark it with a vertical line. So you can see that this took the break here. And what I chose was to take the strategy for the value areas, taking the breaks of the value areas and the retracement on the value areas. You can choose to take all entries, and the automated will take buys off the bottom, sells off the top. It'll take the breaks of the VWAP. It'll trade the profile. So you can choose all of them. I'm only using the value areas. So right here where this broke is right here where we were just talking about this entry. So the automated took that same entry. And then obviously, I left a lot on the table in this automated, but if you were using something other than 12 and 12, or if you were sitting here watching it, you could literally, move your target down and then just keep trailing your stop manually, or you can set it to do it for you automatically. So then we, are around here hanging around. And so this, one thing I do want to point out with the automated is that it cannot read the typical order flow footprint chart, but the programmer and Maria developed an indicator that is reading the orders coming in, the volume coming in, mostly buyers or sellers. So that's how they're able to get this to work without looking at the footprint chart. So here's an entry that, like I just said, was here. And you could take one at the break of the second low value area here. This did not take one, but technically if you wanted to, you could. So there probably was not enough sell volume coming in, or whatever it saw, it didn't take a trade there. The next trade that it took was down here at 942, the break of the low value area right here. So here it didn't take it, here it didn't take it, and I'm sure it's because there weren't enough sellers coming in. It took it right here. And if you look at the last screen, so you can see the time is right around here at 9:42, and that is right here. So that agrees with the area that we would be looking at, taking it once it broke down again outside the low value area. And again, just using 12 and 12, choice is yours. Next screen. So this right here, you can see that that's the edge of this here. So this one we already talked about. That was, taking us out at our 12 tick profit. And you can put multiple contracts in, and you can take different exits, just like your regular manual entries. So here this is around 9:45, it takes another short. So it comes into the fair value area, comes outside, and it takes the entry right here. So let's see, that's around 9:45, and looking at the chart that I would have taken manual entries off of, that would have me taking it right here. So that agrees, right? And again, 12 tick target. So you manage it however you like. Retracement back up to the fair value area. Doesn't take another trade because obviously the order flow didn't agree. Even though it went lower, it didn't agree. So if you decided that you wanted to take a manual entry there, you could. Totally up to you. Now, one thing I want to point out about automated is that you are not going to turn this on and leave it there all day and walk away. Like this morning, the market was so crazy and whippy wild fast that you would have pretty large slippage getting in. So that would be a time where you probably would turn it off. If you see that price is chopping sideways and it just can't get through an area, disable it until it gets out of that area. If you don't trade around news, disable it. You still are going to want to use a little common sense. I know that we all want to just turn it on and never have to think about taking an entry again, just let the computer do the work for us. But unfortunately, that's not realistic. If you have a good morning and you're already well up, turn it off, because obviously if you're anybody who's traded for any amount of time, as the day progresses, most of the time we're going to get pretty choppy sideways. So why would you leave it running knowing that it can't get through an area? So common sense is still it still applies, unfortunately. And so here, it didn't take any entries here because it didn't trade back up to the low value area here. But you can, like I said, make the option to use all the entries or one of the other options, and it will, buy the bottom, buy the bottom. Now, if you have a strong trending day, you're not going to want to do that. again, common sense. So this takes us to 952. And I've got, was that 952 or 1050? Yeah, 952. This screen here would be the manual, and where this picked up on was at 1010. So coming back into the fair value area here, and you can see we were pretty sideways. So if you wanted to, when it was coming back in the fair value area, you could buy that, because now you can see that our fair value area with our HVAs and our LVAs are pretty sideways. So the chances are good that it's going to go from the bottom edge back up to the top edge of that fair value area. So that would be what you would call a coast to coast. Now, a lot of people don't like to mess with any setups in this area because it can tend to get a little choppy. So what they'll do is, if it's sideways, they'll short the top area here or buy the bottom area here. Or once it tries to break out, if you've got divergence to the downside, you can short it off the high of the day, or at the bottom, if you have divergence to the upside, you can buy the bottom. And I say if you have divergence because I'm pretty conservative about it. So here, it doesn't bust through here, so no entry. Now this happened pretty quick. I wouldn't like this as a divergence trade, or taking a divergence trade off this area here, because I don't have divergence for one, but also, I would prefer it to try to break out of there and then fail, and then I can take it rolling over. But obviously it worked out, and what you're going to find is it's going to likely find its way down to that point of control again, just like here on the way up, finds its way to the point of control, pulls back, finds its way up, dilly-dallies a little bit, and it's trying to chop its way higher here to the upside. You can buy the bounces or pullbacks off of that point of control, but I urge you to definitely see where the areas of support and resistance are to your left, where you might get stuck. And that's going to be the easiest way to determine what your target areas can be. So you're not sitting there waiting for a 5-point trade and you only have 2 points worth of space before you might get stuck. And then obviously the order flow will help with this. So if you have buyers and you want to try and buy it, great. If you have sellers and you want to try and sell it, great. Now here, I would like this one, and I'll show you why. You can see here I've got higher high here in price than here. And here on the stochastic, I have a lower high here than here. So that's giving me a heads up that it's probably going to pull back off this area. And what's nice also is you have this topping tail. So, lots of different ways that you can incorporate this into your regular trading. You can look for patterns, you can do all the regular things that you do, but now you can back it up with knowing where these levels are in HVA, LVA areas, our concentration of volume, and the order flow. So here we break out, and as long as the order flow agrees, we can take that. Now, if you're worried, thinking, okay, you know what, it couldn't get through back here, so it's going to have to convince me that it wants to pop through. So here you can see it pops through, then it trades back down, and then it closes above again. So you could take it here, you could take it here, you could take it here when it retraces back up to that high value area. Again, you want to make sure that you've got the order flow confirming with buyers coming in positive delta, and the positive delta getting bigger. Or you can have negative delta as long as that negative number is getting smaller, right? Because if the negative delta number is getting bigger, that means that you're getting more sellers come in. And then as it retraces down here again, you could buy it. You could buy it. In all these areas you can buy. Obviously you can see that this is stuck here, right? So if you take a buy in any of these areas and it's not going, and it's not going, and it's not going, there's nothing wrong with getting out at break even or with a little something. And then if it decides to take off, then you can look to take a pullback again. So looking at the automated in those same areas, so here is 1031, and here is 10, what is that, like 10:35. And here's the automated. And I just went straight to 10:35 because it did not take any trades until then from this last one here. Remember, it didn't take any here. It didn't take this one here. And it took here. And the reason it didn't is because of what I have it set on. I'm only taking the breaks of the value areas. So here takes a buy. And again, I'm using 12 tick target, 12 tick stop, really simple. Now, in the automated, you do have an option that it will not take additional entries. You have the option to set it to true or false, to only enter when you're flat. So if you don't enable that, then it would take another entry here. So again, it's going to be up to the individual. So this takes a trade, never stops us out, and then eventually it does go here. And this is the same entry as right here. So it agreed. And of course, left some on the table here, just shooting for 12. But if you were sitting there at your computer, you can manage it manually. Trades down, back down to the high value area here. It does not take another trade. So obviously, it doesn't meet the criteria with the buyers coming in. So it never takes another entry here, never takes another entry here. It does take one here, which is around 1042, 1043, which is right here in all this chop. So it takes an entry and doesn't go, doesn't go, doesn't go, doesn't go. If it you didn't take one here, it took one here, and it doesn't go, doesn't go, doesn't go, and eventually it does stop out. But you have a full 2 minutes that you're hanging up here and it's not going. And realistically, you're sitting there, hopefully you're sitting in front of your computer with it on. And if you look at your order flow and you just aren't seeing the buyers come in, you can just flatten it. Just get out. You don't have to let the stop get hit. This is our regular manual chart. So this is the area that we were just stuck at. So realistically, if you wanted to, you could take a short in this area here, expecting, again, hopefully to find your way to the point of control and then the lower value area and then hopefully the next low value area. But we just chopped around in here for so long that you might not feel comfortable in taking this. What you could do is, you could draw a line under the area, and this is what I would do, is I would draw a line under the area of support that's been holding, and then I would look to take a break of that. And then once we get down to the bottom here again, I can take a short when it breaks the low value area. Now, this just moved a long way, right? Long way. So would I feel comfortable in taking a short right there? I might say to myself, well, I want to see if this consolidates or retraces first. Either way, if you take the break here, it works out. Or if you wait for the retracement up here and then take it, it works out. Another retracement, it works out. But eventually you're going to say to yourself, okay, this keeps holding and that low value area is pretty flat. There's no real direction on it. So you may not decide to take every single retracement back up, short, short, and then up here, if you tried to short, then you would have been stopped out. Now that's where the order flow is going to come in. If you have a bunch of sellers coming in, you short it. If you have a bunch of buyers coming in, you could buy this area and then expect again to find your way up to the point of control and then back up to that high value area. And the reason we expect that is because of how flat our point of control is, how flat our value area is. It's sideways. So when you see that, you're going to hope to get to the other side. So let's see what automated did there. Automated. So automated didn't take any of this because of the entry strategy that I chose to use, which is the breakouts of the value areas. So it's not going to take this. So the first one it takes is this one right here, 1052. And that's right at 10:52. Now keep in mind, this is an 8 range here, but I've got it on a 4 range for the automated because I have to wait because of my computer for the bar to close. And if I wait for the 8 range to close, I'd be getting in way, way down here. So here's a short. That's the one that we were just talking about. Works out for 12 ticks, retraces back up, takes it again, works out for 12, retraces, takes it again, works out for 12, retraces again. This one doesn't work out. This one stops you out. So what would go through my head if I was, up in this area is how many times am I going to take the same trade? So, you take it once, you take it twice, you take it 3 times. At that point, I probably would be thinking, okay, I've been pretty lucky so far, keep taking those trades. So I might, not take this one. And you can see here, that's that area right there. And if you look at this, where you got in, once you were stopped out, if you're somebody who buys the bounces and you saw buyers coming in, you can just reverse and take the buy if you want. I don't. If I had taken that, I would have been stopped out. Period. Simple as that. And you're going to have stop outs. Nothing is 100%. I cannot stress that enough. No matter what you think, it just isn't out there, you guys. So what I was trying to do is just show you the same entries on both taking manual entries and the automated. Now, I do want to show you one thing before I talk about a couple other things. I'm going to just show you a really short recording that I have that shows the automated taking the entry. So let me just show you what that looks like if I can get it to play here. Here we go. All right, so I'm going to just show my screen here. Okay, so this is yesterday afternoon, and I just picked one that I knew was going to fire off because I want you to see it taking the actual order and how you can manage it. It's just like your chart trader. You just take it, grab it, and move it. So what we're waiting for is for this to trade back down here and see if it takes an entry. You can see it took one here, and if you didn't require it to be flat to take another entry, it took another entry here. But either way, you're in here, and then you got your 12. And again, I'm just using 12. Some people use, a 5-point target with, a 5-point stop with an unlimited target. It's up to you guys. And it's as simple as, clicking that to enable or disable. So I'm waiting to see if this is going to take an entry. So you can see it just took a buy right there. So obviously it had some buyers coming in. So it took the buy, and there is the 12-tick target and 12-tick stop. And you can see that I'm moving that around just so you can see that you can just grab it and move it, just like your regular chart trader. Just like it. So if you had multiple contracts, or you decided, you know what, this is moving a whole lot better than I thought, you can take your target order and move it way out of the way and just keep trailing with your stop. It's totally up to you how manual or automated you want this to be. So let's see if we can just skip ahead here. This isn't very long, really. It's only a few minutes long. I want to see if I think it gets up there to that target. And you can set alerts. I mean, you could do everything you can do with everything else. The other tools. If you get the other tools, and I'll go over that in just a second. So here you're probably thinking, okay, what should I do? Should I leave this alone? Should I get out? And then you refer back to your order flow. And if you don't see any sellers coming in, just sit tight. So this trade's taken a while. So there's the 12 ticks there. And I probably would have been losing my patience on that. That was yesterday afternoon. I probably would have been losing my patience on that to sit there for 7 minutes on that, I have to admit. All right, let me just pause this real quick and bring up my slides again. All right. So I know that it's hard to look at the order flow during a webinar and get the gist of it because it is so fast moving. So what Maria is willing to do, and you guys have probably seen it in the email, if you want to see the tools and the automated setups live, Maria never offers a trial, as most of you know. It's a rare occasion, but she's willing to offer a 5-day trial for $50, and it's a one-time only offer. She's not going to do it again, and space is limited. And I'll send the link out to you guys tomorrow with the recording. And the 5-day trial would be next week, Monday the 14th through Friday the 18th, and her room is open 4 a.m. to 11:30 a.m. Now, I don't get up that early, but I can tell you that Maria is very often finished trading by the time the cash market opens at 9:30. So, you know, I'll trade usually 7:30, but I definitely don't get up at 4 o'clock. And you definitely have to register by tomorrow midnight. And again, space is limited, so please don't wait and think about it. So what comes with the order flow, the regular order flow package, not the automated, is you get divergence delta, the market profile plus, you get the order flow charts, the price action, and I spelled that wrong, the VWAP market profile. And with Maria's order flow tools, she gives you 6 months free training in her training room. And that's open every day, Monday through Friday, 4 a.m. to 11:30. And she's going to give anybody who orders the automated or the order flow tools by Sunday at midnight, she'll give $250 off the package and free installation for the software. Now, there are lots of different options available. If you want to keep the cost down, you can get the order flow and the market profile software only, with the room included or not included. So if you didn't think you needed the training, you would pay less than somebody who wants the training. And then if you want the automated with the same software, that's the order flow stuff that I just went over with the footprint chart and the high and low value areas. If you want the automated and that, with the room included or not included, she has a price for that. And if you want the automated without the order flow and the market profile software that I just showed you, the ones with the pretty colors on the chart, because the automated doesn't need those in order to see those levels. There's a different price for that as well. So if you're on a budget, she's willing to offer a couple different options on that. So if you want to take advantage of any of these offers, then send her an email at tradetheeminis@gmail.com, or you can go to tradetheorderflow.com, and I'll put her contact info in the email that's going to go out tomorrow with the recording. And you could trade this on anything, Robert. I only showed you the NQ, but you can trade it on anything. You could trade it on equities. You can trade it on the forex. You could trade any of the E-minis. Whatever you like, you can trade it. Maria, do you want to take the mic at all? Let's see what Alan is saying. That's going to be a question for Maria, Alan. Would you mind sending her an email or send Tom an email? And Greg's asking what contracts are traded in the room. This is Maria's room, so I'm going to give her the mic. Maria, hopefully you're here. I'm going to unmute you. Okay, Maria.
Hi, everybody. Hello, everyone. Thanks for joining us this afternoon. Basically, we used to trade the euro a lot, but since it decreased in tick value, although I could put more contracts, the volume seems to have disappeared a little bit. So basically in the morning, I mean, I traded the euro today. It did very well, but that's because there was an ECB meeting. Actually, the robot did really well. So crude oil, then we switch to the NQ. We might introduce the YM because no one really wants to pay this next $110 that we will have to start paying to get Russell data to the ICE exchange that starts April 1st. So I'm still contemplating if I'm going to continue trading it. During the U.S., it's usually, if somebody is able to keep an eye on crude, it's crude, Russell, and NQ, and we have a few resident people that will post their YM trades in there as well. So, but once you learn the method, you could trade whatever you want, pretty much.
And a lot of you know that Maria's offering a free month as a drawing. So I'm going to tell you who won that right now. And it is, let's see here. Sorry, you guys. It is, drum roll. It is Joe Baghadanitz, and I apologize if I just butchered your name, but we'll send you an email, Joe. So my apologies.
I'll make a mess out of his name too.
But we'll send you. I'll give Maria your email address once this is over, and she'll contact you with the link for next week and so forth. So you guys, I know that a lot of you, again,
Gordon, there's order flow in the Slinky entries. There's two options. You could have Slinky with order flow or without.
Yeah, and I'm going to definitely, Slinky is one of my setups, and Maria had a programmer program that for automated as well. And I'll definitely talk more about that during my next Slinky webinar, but that is also working out really well. And like with anything though, I can't stress this enough. You have to know when to turn it off.
And I'll also give you, if you can't tell where CHOP is, I also throw in a DM Plus version 3A, which, the minute I see the word CHOP, I disable.
That's a good idea.
If you can't tell yourself before, like, you get stopped out like 5 times. So before you get stopped out 5 times, I give you a tool. And what we did is we just updated the core package to include, I had included on the VWAP trade a CHOP indicator, but we included another CHOP indicator for the LVA and HVA breakouts. And that's been really, really keeping you out of a mess.
And I have not updated my stuff yet, you guys, because I just got it yesterday and I was afraid to update it that I wouldn't get my charts back. So I still need to do that. So, I'm hoping that in some of those choppier areas that's going to keep us out. Greg is asking about Ninja 8 Ready.
No, Greg, a lot of people are really concerned about Ninja 8. However, I wouldn't be. It took us 8 years to go from 6.5 to 7. So my programmers aren't too concerned about 8. Neither really is Bloodhound. Neither is Ninja, for that matter. I speak to Ninja because I'm a partner a lot, because I have issues and they have to come on and fix things and what have you. But it's still beta. When it does convert to 8, it will be, obviously I'm going to still use it. I'm not going to stop using it. But nobody's near. There are very few people actually moving this stuff over to 8. So that's the heads up.
Okay. What I'm going to do, you guys, I'm just going to stop this recording, but we can still answer questions. I just don't want this to run out of any space.